All right. Hey, everybody, Real Estate Ninja here. I hope you're doing well. Got us right at Zero Hedge. It's about home sales, and we're going to go through the minutia because it's funny. Home sales rose, new home sales. We're going to talk about that. But it's because they gave all these teaser rates. And just when you thought people couldn't be fooled, you know, the 2008 recession, the ninja loans, the subprime loans, but then those teaser rates, the ones that would come out for a year or 2 years, and then all of a sudden people would get crushed. That's what happened to a lot of people in 2023. The title of the story is New Home Sales Rose 4% in 2023. Prices tumbled as existing sales hit a record low. This does not spell anything good for the real estate market. As a matter of fact, it spells doom for a bunch of people that got into houses. Now think about this. Interest rates have not gone down. Mortgage rates have not gone down. They've trended down a little bit, right? Because of the 10-year bond. But it's not because the Federal Reserve has actually lowered rates. They just said, we're going to keep them higher for longer. So last year, a ton of home companies, Lennar, Toll Brothers, and others got together. They got together with banks and said, let's sucker a bunch of people in. Let's sell some homes. Let's make a bunch of money. And what we're going to do is we're going to give them a teaser rate of 5%, or was it 5.5%, 5.25%, around there for 1 year. And so many people bit. So many people, and when I mean a lot of people, it's still this small group of people because we're seeing record low sales, but they came in, they waited in, and they've been wondering, you know, when low rates are going to go lower. This is scary. They're believing all the FOMO, all the FUD, right? And then all of a sudden, bam, this opportunity comes up. 5-something% for 1 year. Yes, by then rates will be lower. And that's what they were telling every single one of them. Rates are going to be lower. Don't you worry. You know, I remember this flipping real estate myself as I was liquidating everything I had, except for I kept 3 properties in 2006. I was liquidating everything as fast as I could. I was scared to death. I was driving my family and friends nuts because I was saying a housing crash is coming and I was the crazy guy. But I remember those teaser rates and then eventually the ninja loans that came out. And those are going to come back. If the Fed stays higher for longer, if this inflation continues to persist, ninja loans will be coming back. I know it sounds crazy, but look at how this has already happened. The government's already came out and said, hey, let's help people with poor credit. We're not going to ding you if you buy a house, but we're going to ding the people with high credit. Because the people with good credit, high credit, are not buying homes. The government knows this, but the public does not. So they're saying, all right, don't worry, we're gonna get you in. And then, you know, banks are coming out and saying, we're gonna target specific ethnic groups, Hispanics, African Americans, just like they did in 2005. You can't make this up. And then what comes next? Oh crap, we need ninja loans. Let's do pay option arms. I tell you what, those are coming next if the Fed does not pivot. And the only reason the Fed is going to pivot is because the economy crashes, the GDP collapses, and we start going into the official recession, even though we're already there. The only thing that's holding up the GDP right now is wartime spending and factories being built, ghost factories, mind you, because of the semiconductor crisis we're going through because of the China and Taiwan conflict. You can't make this up. You need to be ready for this. Also, I'm running a sale right now, lowest price ever on the side hustle course. I've had over 21 side hustles, 22 to be precise, throughout my life, and each one of them have become more and more successful. I've made more money, but it was a side hustle selling electric trains on eBay, how I bought my first home. So if you don't have a second way of income, go and check that out, okay? And I'm gonna be putting even more content in 2024 on it because it's so vital and we're seeing so much success on that course. Now it says here, new home sales, again, rose 4%, but prices tumbled. It says on the heels of the worst year ever for existing home sales. Okay, again, on the heels of the worst year ever. Okay, remember those phrases when we start getting into these numbers of existing home sales. New home sales were expected to rebound 10% month over month in December after plunging back to reality in November, down 12.2% as mortgage rates tumbled. New home sales disappointed in December, rising just 8% month over month. Again, these are new home sales. These are home sales that are being done by companies that can really pull the price back. They've got deep pockets in banks, so they have the ability to pull back a lot of negotiating power. I've shown you how Lennar was begging their contractors to give them a 10% discount so that they can push that over to the new buyers. These are desperate times for these companies, and they are giving out these teaser rates. And so it says new home sales disappointed in December, rising just 8% versus the 10% expected, but that's still the biggest month-over-month jump since last December. Again, why? Well, you couple the teaser rates with what happened in October, November, December as rates pulled back heavily because the 10-year bond sold off, right? There was a drop in that. Or sorry, a lot of people diving into the 10-year bond, so it brought the rates down. But also the Fed said, hey, we're gonna not raise anymore, and we may pencil in 3 rate cuts. So banks felt a lot more comfortable with offering lower mortgage rates. So that caused people to dive in. Now again, mortgage rates were still over 6%. They just dipped below it for a 30-year fixed, right? And again, these numbers are predicated on if you have stellar credit and a 20% down payment. Now with a median home price of what, we're in the fours right now, 400 and something, let's say 470,000 off the top of my head. That means you got to come up with what, 47,000 times 2. So you need 80, 90, you need like 100 grand to come in on a median home. The median home, 100,000 bucks. You tell me, with the nation having an average savings amount of $400, right? The Federal Reserve puts out this information. The banks tell you the average person has 400 bucks in the bank. You tell me how many people have stellar credit and $100,000 to put down on a home. Now, the truth is that people don't need that to go buy a home, right? You can get in for 0 down on a USDA loan. There's FHA loans, 3.5%, even lower now. As a matter of fact, there's 1% options, okay? They want to do everything. And again, that's yet one more sign that the market is in serious contraction when they're offering, these lenders are saying, just come in with 1%. Just come in with 1%. That is exactly what they did in the middle of the phase before the ninja loans, where they were attacking, they were going after people with low credit, people of certain ethnic groups, and they were people that didn't have money, okay? This is the exact same thing over, but on a much larger scale, because what most people don't understand, and I teach this all the time, there are more homes today built than in 2008. We are not in a housing crisis. I know this is scary. You are being lied to, all right? If you think you're being lied to, you believe that, type 1. If you think, no, we're in a housing crisis, type 2. Because as you're doing it, I'm going to tell you something. 2010 began a boom unlike one we've really ever seen in recent history, in the last 50 years, of apartment buildings, of multifamily living spaces. Units, five units or larger. We're talking megaplexes of apartments. Since 2010, the building of those has skyrocketed. Sure, the amount of single-family homes has dwindled. That's true. But the point is that there are more living spaces in America today, way more than there were in 2008. Okay, they don't want to tell you that on the news. They want you to FOMO in. They want to sell you their new house. But by the story, they're having a hard time doing that. Now it says, of course, having pointed out the dramatic series of downward revisions to the data this year, November's 12.2% plunge was revised up to an 8% drop. On a SOAR basis, this is seasonally adjusted basis, new home sales ended at 664,000, completely decoupled from existing home sales. And it says this left new home sales up 4% year over year. So now look at where we're at right now. Now, I want you to see this. Again, this is predicated off of this last year's home sales, new home sales. They bumped up. This chart you're going to see here. First, let's look at the 2008 crisis, okay? This chart where it starts dipping down is 2005, and it was still negative in 2010. So 2005 to 2010, negative. And then we have all this positive. We see a drop, massive positive, drop during the pandemic, right? And then we see this tiny little bump. I want you to understand this. This is not the beginning of one of these cycles. This is why. Because that bump was predicated off of a downward market in sales as homes are plunging, and a solution to, you know what, because interest rates are going up, mortgage rates are going up, let's give them a little bit of a teaser. Let's give them a 1-year mortgage at 5%. Now, just so you know, all those people that bought this last year, in 365 days, when it goes past, those payments are now going to be adjusted up. When they were told last year, yeah, get in now, it's the teaser, the Fed's saying they're going to lower rates, no problem, they're going to lower rates, you're going to be able to refi lower. And they're like, yes. And they tell them things like, and during your refi process, you don't even have to make a payment for 30 days. And this gets people the dopamine firing off in their brain on all 4 cylinders, and they're super pumped. Well, here's the thing, Fed didn't lower rates. So all those home prices, all those mortgages are going to reset to the higher rate now this year. So how many people do you think can afford those? On top of that, we have more companies laying off people. It's all over the news. Look, Google just announced, what, 30,000 people it's going to lay off. This is a year after AI, ChatGPT was announced. And I said, watch out, massive layoffs are coming. And they announced it. They said, we're laying off the 30,000 people because their jobs are being swapped out. We're talking about Google Ads, right? It's a big deal because Google Ads, first off, there's less companies giving ad money. This is a fact. This is what's going on. And those jobs are being replaced. So you not only have people now going to be paying higher rates. Doesn't this sound a lot like 2006 when those ninja loans were resetting, those 1 year, 2 year terms were starting to reset and people are going to higher payments? And you're going to see people, the delinquency rate spike in 2024 on these homes. Now it says the median home price fell 13.8% year over year to 413. Holy cow, I was totally wrong. I said 470. You're right, it keeps falling. I think it was 470 at the peak. So let's go and look at this chart. This is, again, nobody wants to tell you this. Statista won't tell you this because those numbers, those charts haven't been revised. But the Federal Reserve is telling everyone this. This is what's happening in the 2023. The median home price, right here, the median home price versus new home sales. The red is new home sales, green is the median home price. Look at that on a percentage basis. Holy cow, this is amazing. It was over 500,000 at the peak. We're now at 430? 430? So we're above 500, now we're at 430. I don't care what you think is happening in your neck of the woods. This is the nation's median home price. Now, I want to remind you, let's just look at what happened in 2006 when people go, it's not that bad, Ninja. All right, stand by. At the peak of the housing bubble was 2007 as far as the median home price, all right? The median home price came in at around $230,000, right here, $230,000. And within a matter of a handful of years, it dipped down to a low of around $240,000, all right? So on a percentage basis, I want you to tell me, where do you think we're headed here? This is a lot worse than this. Also, I want to remind you, during this period right here, we didn't have nationwide inflation. We also did not have a nation that was in crisis, its currency, because the world is rejecting its currency and going to other currencies. To say that this is so much worse than 2008 is a joke. It's an understatement. And here it says, mortgage rates have plunged recently. Do you really think it's plunged? I don't think going from 7.25% to right under 6 is a plunge. On a percentage basis, it's a nothing burger. Because when you add the price of homeowners insurance, you add the price of raised property taxes because the value of the home is going up and the price of the home going up, I don't think that's really, it's a nothing burger to me. It says applications, as they plunged recently, applications for home purchases have only rebounded modestly. And while mortgage rates have declined rapidly, again, I'm not agreeing with that, they remain massively high relative to the effective mortgage rate for all Americans. That difference is the subsidy that home builders have to fill to enable buyers, and it's still huge. Now, of course, it says investors don't care about actual fundamentals or rates are down, so buy the builders. And that's referring to the home builder stock. And again, that's not fundamentals. They're saying rates are down, so that means people are going to buy, so buy the home builder stock. This is akin to what's happening with every company in the country that's laying people off, that's publicly traded. Say, hey, we just laid people off, and the stock goes berserk because shareholders are like, yes, not caring that the fact that they needed to fire all those employees or because they were hurting as a company financially, that doesn't matter. So you see there's a complete disconnect, and that's what's happening right now. I want to take a quick poll. Type 3 if you believe that home sales are going to continue to rise or in 2024, new home sales, or do you believe they're going to start to drop like a rock in 2024? So type 3 if you believe they're going to go up, type 4 if you think they're going to go down. Yes, type 3 if they're going to go up, type 4 if they're going to go down. Sorry about that. And I'm just curious to see the feeling for today. So it looks like most people are typing 4. They believe they're going to go down. So the question is this a good time to buy? I would say no. Now, there's always a good time to buy if you get a great deal. Like I said the other day, I'm constantly every day looking at real estate. I'm going to look at real estate today. I saw a property that's already taken a 20% haircut from what it would have sold for last year. And I was considering that one because of the property's usage, what I was going to be able to do as far as businesses, because I'm getting ready to start some side hustles on the side that are going to crush it as this market turns down. I'm going to take advantage. I need storage space. I need warehouse space for products. I need a land for growing things. I am always looking at that, but I want to buy the property right. I want to be able to know that if I buy the property for X, then I'm going to be able to make X times 10 because of its usage, right? Whether it be agriculture land, whether it be warehouse or manufacturing, I want to be able to know that I'm going to be able to do that. However, right now I'm renting, and I may rent those spaces as well because I want those prices to come back. Look, I'm going to put the link down to the side hustle course. If you don't have a side hustle, you want to know, I take it from literally starting a garage sale and selling your stuff that you don't use to starting in a corporation and everything in between. I'll put a link down below. It's the lowest price I've ever offered the course for. It's $199. And we're seeing massive success. It's time to start continue saving money, but also start a side hustle. Start small, make money, build that money, and then go and buy this real estate for pennies on the dollar. Hope you got something out of this. Thank you so much for watching. The Real Estate Ninja is out.